welcome. I'm your host, Henri Arslanian, and welcome to this special episode of the Future Money Podcast. Before we start, first of all, a happy start to 2024. But I want to say again, a big thank you to the 500,000 of you following my content each week. This podcast, The Future Money, is now once again ranked in the top 5% of all podcasts globally on Spotify. There's thousands of you every week from over 160 countries listening to this show. So a massive thank you for all your support. As you all loyal listeners know, my goal with the podcast is very simple. It's to go deep in some of the biggest ideas, trends, and developments we're seeing in the field of crypto, and hopefully empower you with this information and then let you make your own decision on what their impact can be on the future of money and the future of finance. And to do this, I invite each week one of the leading figures of the global financial and crypto community to have this one-on-one conversation. And our special guest today is someone I think many of you have heard, and I've seen him speak or on TV or different mediums. It's Mr. Jay Clayton, the former chair of the SEC from 2017 till 2020, who is now a senior policy advisor and of counsel at Sullivan and Cromwell. Jay Clayton, welcome to the show. Good to have you on the Future Money Podcast.
Thank you, and Happy New Year.
Exactly. Well, one thing, by the way, many of our audience may know you as a former SEC chair, but one fun fact about you, many people don't know, is apparently you're a big open ocean swimmer, and you're brave enough to even go in the shores of Jersey in the summer months that we have. So here you go. One fun fact about who said ex-regulators are boring people. Here you go.
Well, thank you, and I gotta love the Jersey Shore.
I also saw, by the way, in your bio, you used to play soccer back in the day, in rugby, apparently, in your university days.
Yeah, you wouldn't know it to look at me, would you?
So actually, let's kick off with that, Jay. I mean, obviously, it's been now some time, 3-4 years that you're not at the SEC. How has life changed for you on a personal level? Are you finding life in private practice easier than in the good old regulator days? Like, tell us more about how, on a personal level, life has changed for you in the past couple of years.
Well, I don't think I can really look at it as how life has changed. Having the privilege to have a regulatory job like chair of the SEC or chair of one of the other U.S. regulators or say another G7 financial regulator, it's such a special experience, particularly for somebody who cares about markets, cares about investing, wants to see in America in particular, middle-class investors benefit from our capital markets and investment. I try to compare it, but the longer time goes by, the more I realize I can't. And that doesn't mean I'm not super happy. I'm happy with what I'm doing. I like advising clients. I like the boards that I sit on. I like doing those things. But I think the more time goes by, the more I look at it as a special time, including because of the people I work with. I had the most fantastic team.
It's amazing, and it's interesting that it changes. It's a privilege to serve, like you said, right? It has actually, people often underestimate, especially those who are now lawyers or have now followed the regular scene, the impact that a regulator like the SEC has on the not only middle class, but the investing public at large. Not only in the US, but also globally as well. Like that, the power that is given and the impact you have is something that is quite incredible, actually.
Yeah, can I give you just one stat that I hold dear, and that is, if you look at fines that the SEC and financial remedies that the SEC collects every year, at its high watermark, we had pretty high fines when I was there. I hope they were good fines, but $4 or $5 billion. If you look at the middle class money in the market, let's just take a really low estimate. It's probably $10 trillion. If you save 50 basis points, 0.5% a year, because you've reduced costs, you've been more efficient, you've been more observant, that's $50 billion a year. More than 10x the fines that get all the publicity you can put in people's pockets just by adding efficiency. Isn't that amazing?
Yeah, incredible.
So I think that's the kind of power you could have if you do your job well as a regulator.
Actually, before we talk about crypto on this topic, right? I mean, when you look at the SEC chair in 2050 or the SEC chair in 2070, how do you think the regulator of the future will look like? Is it actually will it be still lawyers or somebody with regulatory background, you think? Or there'll be skills like AI, technology will be more in demand? How do you see that Jay Clayton in 2070 or who's SEC chair, how would he or she look on that side?
You know what? That's the first time in this type of forum someone has asked me that question. And it's a fabulous question because our markets are going to change. Traditionally, there's been a dichotomy between public and private investments. And there's been a big dichotomy between retail investors and institutional investors, and a big dichotomy between onshore US investments and the rest of the world. Technology, the speed, all of those things are going to collapse those bright distinctions that we've had over time. And the regulator of the future, the regulator of the next 5, 10, 15 years is going to have to deal with that, what I would say is merging of silos and do it efficiently. So I think it is going to require someone who has either the skills themselves or is able to attract the skills around AI, technology, and the like. Things are going to change.
And the question is also, where do you get the skill set? Not to dwell too much on this, but I still find it incredible that we let law students, for example, graduate from law school with no courses on coding. If we believe smart contracts will be a big topic, or how to use AI in enforcement cases, for example, and so on and so forth. I think there's also the even bar exams. You can argue, are we testing the right skills?
Let me tell you something we're going to have to lose. We're going to have to lose this aversion to the quote unquote revolving door. If we're not bringing people who are working in technology, working in markets in the private sector into our regulators, we're going to whiff on the future. You cannot become adept at these skills inside the government of today because government is behind on technology.
And you think what changes required? If I get it, the government is behind when it comes from a technology perspective. What do you think changes are needed? Is it a fundamental change? Is it a mindset? Is it skill set?
I think it's a mindset. Understanding what I just said. I hope you agree. If you disagree, let me know. But the idea that the technologists inside the government in our most core functions are a generation behind the technologists in the private sector, that's not sustainable for good government operation. I mean, our IRS is still using paper. Yeah, we don't need 75,000 new IRS agents. We probably need 20,000 less and 1,000 who really know how to apply AI to the review of tax returns. We will do better adopting AI and tax return review than we will hiring another 50, 75,000 people. There's no doubt about it. Think about just that example.
100%. I think there's a whole skill set, mindset, like you said, the generation, even they're behind. It's probably very polite and diplomatic of you as well. But I think there's a lot of work that needs to be done for sure.
Why does the U.S. stand where it does in terms of markets and economy? Post World War II, we brought a lot of people, including during World War II, we brought a lot of people with a lot of real world corporate experience into the government. And we set up functions that, to be blunt, we've relied upon for the last 50 years.
Yeah, exactly. Yeah. So let's talk about that from a U.S. competitiveness perspective, right? Let's talk about digital assets, for example, right? Right now, when we look at crypto, during your tenure, obviously you took a very active role when it comes to going after ICOs that were being sold as securities, all the way to think it was your last day in office where you had the Ripple case that was filed, and obviously those were really the hoopla days of crypto, literally, especially the ICO boom. There was obviously a lot of scams and a lot of bad apples that gave the industry a bad name. When you look at it now, taking a step back of, let's say, the U.S. crypto digital assets regulatory framework, right? And you talk to clients around the world, where do you think we stand from a U.S. perspective? Do you think the U.S. has missed the boat, is behind? Do you think this approach of regulation by enforcement is the way to go? Just keen to get your general thoughts on where the U.S. stands on a policy perspective.
Yeah, I find, particularly in the capital raising area, I'm going to go a little deep here. There are two types of securities transactions. And let me be clear, we regulate securities transactions, not securities themselves. There are two types of securities transactions we regulate in the US. The first is capital raising transactions, the ICOs. When someone is saying, here's a token, here's a security, here's a bond, and in exchange for your money, I'm giving you that, and it's going to increase in value if my venture goes well. We in the US rigorously regulate those transactions if they're public. So if you go out to the general public and raise money, you have to jump through, I would say, immense, some I would say incalculable hurdles for anything other than a large company. Now, is that a good policy decision? Maybe yes, maybe no, but that's at the core of our securities laws. And I think the ICO folks and others just didn't understand how fundamental that rigorous regulation of capital raising is. The second type of securities transactions are trading transactions. Once the capital raising function has settled, and let me just be clear, a company sells to me and then I sell to you the next day, that's still part of capital raising. A company says to me, I hold it for a while, I've had economic exposure to it, and I sell to you 6 months later, that's a secondary transaction. We regulate that very differently depending on how that transaction takes place. If I hold a security for a year and I sell it to you, no exchange involved, no broker involved, we're just trade. There is really no regulation. Then there's platforms that are lightly regulated in terms of, and a lot of bonds and other things trade on those platforms. And then the highest form of regulation is exchange type regulation for secondary trading. So it's quite complicated. And what happened with crypto was in both those types of transactions, people just thought the technology could let them blow through respect for those spaces. As this plays out, I think people have realized capital raising is going to continue to be rigorously regulated. And now we're going to find our way on trading, depending on what type of transaction it is and whether the capital raising token has remained a security or not. So I just said a whole lot, but I hope it was somewhat clear.
Well, absolutely. But let's go a layer deep on this. So let's go start. You mentioned obviously the issuance and the trading, right? On the issuance side, if we ask the broader crypto community today, there's obviously a lot of not only skepticism, but also frustration because obviously we don't know whether these assets are a security in the first place, right? And the characterization of it. I know you've been public saying Bitcoin is probably not a security, but of course the SEC has taken this ambivalent position with a number of other digital assets. Do you think this lack of clarity is actually a problem, or do you think it's fixable, or is just inherent way legislation is drafted and operates in the US that it's going to continue this way for a while?
I don't think there's very much lack of clarity. I think if you look at the substance of what people are selling, you can pretty easily ascertain whether the transaction involves what we would classify as a securities transaction, which is I give you my money in exchange for something. And I'm expecting that something, whether it's a token, a bond, I'm expecting that something to increase in value due to your efforts. Now, I love to give this. Can I go into an analogy?
Of course, go ahead.
It shows the distinction. You come to me and you say, you know what, Jay, I have a fabulous idea for a Broadway production. I don't know if it's going to work, but it could be huge. If I get a great music score, if I get a great set of actors, if I get a great venue, we're going to produce something, and it's going to be about the circle of life on the savannah in Africa. And you say, Jay, hey, give me $10,000, and I'm going to give you 10,000 tickets. Those tickets might be worth, today they're worth $1, maybe, but they might be worth $100 or $1,000 each in 5 years. Those tickets represent a securities transaction. You've told me you're going to build out this play, and in 10 years, these tickets may be worth something. That's a securities transaction. 10 years later, you've produced this play. It's selling out every night. I walk up to the box office and buy a ticket. It's just a ticket. It's for the show. I'm not buying it expecting you to do more and increase in value. I'm not buying it to finance you. I'm buying it to go to the show. And you can see how something that takes the same form can be something different 10 years ago than it is today. People use that transformation to argue that at the fundraising level, when there's no venue, no actors, no nothing, it's still not a security. Give me a break. You're buying it. You're buying it hoping that you're going to do a great job. I want you to do a great job. And I might even sell to my neighbor saying, hey, well, you know.
I mean, the argument there would be, I get it, your analogy of a ticket, that it's, you buy $10,000, 10,000 tickets at $1. I guess the way the debate would be if you're selling this membership that lets you access the Broadway venue, that becomes more member. I guess that's where the nuances are coming in and the analogy.
Sure, but you can dress it up, but once you make that membership transferable, it sure doesn't look like I'm buying a membership. It looks like I'm buying something, hoping you build a great club that all the fantastic stars come to afterwards. And these kinds of, what I would say is these kind of semantic games around securities regulation, they're not new to crypto. I can tell you that I spent my life as a securities lawyer with people coming to me with these ideas, and I was like, nope, doesn't work.
But then the argument on this, is the argument against. Obviously, there's this situation which we are in the U.S. right now, where a lot of these tokens. Obviously, there's all the litigation going on with the SEC. But then, let's say if a crypto exchange wanted to register. The second point, you mentioned issuance and you mentioned trading, right? An exchange would come and wants to register, for example, to trade securities. It is in practice, according to a lot of these exchanges, de facto impossible, right? So that's what the limbo a lot of these crypto exchanges are in right now, which cause difficulty as well.
This is where there is valid questioning, and I'll even go so far as to say valid criticism, that to the extent this technology is a new way to raise capital, new way to facilitate trading, the regulatory community has been slow to embrace it. If I walk in to a regulator and say, whether this is or is not a security, let's end that debate. Let's treat it like it's a security. What do I have to do to facilitate trading and issuance? That's a question that should be being answered.
And I think if that was a role, there was an option being regulated, obviously it'd be one of those problems would go away. Can I ask you, Jay, on a macro level?
Can I just say this? Of course. I'm not that sympathetic to the frustration that we have rigorous securities laws. I am sympathetic to the frustration that we have not adopted those laws to allow the new technology in. So, for a technologist, if a technologist comes to a regulator and says, look, this technology complies with all of your regulations, does your regulatory job at least as well, but is more efficient. People get the information, they get the protections, they get all those things, and it's more efficient. A regulator should embrace that. One of the problems was technologists came and said, this technology is so good, we should ignore some of those pesky regulations and you should adopt it anyway. That's never going to work with a regulator.
So if you had, let's say, a message of feedback or a general advice to the crypto community, do you think over the years the crypto community took the right approach in dealing with regulators? Were we too cocky? Were we too arrogant? Or we was a bit naivety when it came to regulatory matters? And what advice would you give to the crypto community in the way they're dealing with regulators?
I think there were two mistakes by the crypto community. The first was to think that the principles of financial regulation and securities regulation were going to change as a result of technology. I don't think that was ever going to happen. We have too much vested interest in the protection of our retail investors. And rightfully so. The ICO boom shows why you need it. $4 billion up in smoke. Okay. The second thing was, once that was realized that the law was not going to bend substantially, to go for comprehensive legal change rather than incremental change was another mistake. My advice has been start with something simple that's proven, like stablecoin. Figure out how to get a well-functioning stablecoin. Figure out how to custody digital assets, whether it's a digital commodity, a digital security, or something else. Let's figure out how to custody it. Then let's figure out how to, if we take those incremental steps, we're going to get somewhere. The idea, the myth that there was going to be great legislative change that was going to revamp the securities markets, the commodities markets, create a new regulator, that was crazy.
So it's interesting because obviously, and I know you wrote op-eds about this topic, about your views on stablecoins, and I agree with there's obviously a lot of benefits that the stablecoins can provide. And I hear you where you mentioned that stablecoins, maybe it's a layup that actually community could use because of the benefits are there. But the crypto community, to its defense, I mean, there's been numerous efforts to try to provide, obviously, the stablecoin rails, and there's numerous attempts to, and obviously, I'm not talking about algorithmic stablecoins and some of the scams out there, but on a properly regulated manner. Do you still hold the same view that obviously stablecoins have a lot of potential? And what do you think could be done to bring stablecoins more mainstream, if that's a goal that you believe from a policy perspective we should have?
I think stablecoins have immense potential. I think we should facilitate truly stable stablecoins in our ecosystem. The amazing amount of stablecoin transactions that have taken place without a single complaint that I know of, instantaneously across the globe. Are you kidding me? Remarkable. And we should facilitate that. Why has it taken so long? Because people have asked for much more than just that as a start. And you're talking to regulators, and you're talking to legislators that have limited bandwidth. And if you're coming at them with 10 asks and 8 are unreasonable, they're not going to filter out the 2 that are reasonable. They're just going to look at this crypto community in a monolithic way and say, that's just too hard. That's the reality of the, bandwidth in the legislative process and bandwidth in the regulatory process is limited.
So it comes back to what you mentioned before. We should have acted incrementally, basically, go for these baby steps, baby wins, and maybe stablecoins are one way to achieve that.
I think I think the Bitcoin ETF, which I do believe will be approved, I think that for the adoption of distributed ledger technology, tokenization, and the like across the financial ecosystem, this is way underestimated. If the SEC approves these, that means they've gotten comfortable that the custody of digital assets works, that the create and redeem function around digital assets works, that the trading of digital assets that are not securities is sufficient, that they can feel comfortable. I mean, that's a big step forward.
Yeah, understood. So obviously your view is that actually a physical ETF will be approved. You believe in first quarter, 2024, January 2024. If you're a betting man, where would
so I don't own any, and I don't, I don't bet necessarily. But what I think is every legal issue, and I think every functional issue, has been decided around Bitcoin and an ETF. So I've said, and I'll say it here, I think it's inevitable. I don't know what hurdle is left to clear.
So why do you believe it took so much time? Was it because it's inherent hurdles? Let's say how the redemption is working, the subscription is working, like you said, the custody issues. Do you believe those were the issues, or you believe it was a more, many would say there was lobbying from some of the institutional players who were not ready yet. Many would say there was just the SEC and the anti-crypto approach that was taken. What do you think it took so long for the physical Bitcoin ETF to be approved? When it's approved?
Multiple issues. And look, I was there when the first applications were filed. Looked at the trading market for Bitcoin. It was global. It had very few controls. There was obvious manipulation. whether it was wash sales, laddering, pump and dumps, all sorts of the kinds of activity that as a regulator, you have to ask yourself, should we have retail exposure to a market where we know there's fraud? Now, the underlying trading in Bitcoin, through work of actually private institutions, is at a what I would say is at a level of surveillance, at a level of volume, and the like, where institutional investors, sponsors have come in and said, we're putting our good name behind this. We think these markets are actually functioning with minimal or no manipulation and fraud. So that's a sea change. And I think that that's an appropriate hurdle that a market has to get over before you're going to have a retail product available. So that disclosure, and then the mechanics, the custody, the create, redeem, that all of those things work. And to put a point on it, hacking and other types of risks that we saw are not there. Lastly, and I think this is important, that the asset itself, the underlying asset itself, is not being used for nefarious purposes. And the amount of AML, KYC, BSA that goes on in this market around the globe has increased dramatically. So all of those things are changes. So people can look back and say, oh my gosh, it took too long. But take each one of those things and say, when were we really comfortable with this?
Yeah. Interesting point you mentioned. Of course, I think I agree with you on when it comes to elements like custody. There's been obviously tremendous comfort and improvements that have been done by the crypto community. Where, not to be the devil's advocate, but many would say, okay, when it comes to levels of fraud, and I think there were always going to be in any asset class, including crypto, there always going to be a level of fraud and bad actors. But if let's say we're comfortable with, right now there's ETFs on markets like I don't know, India, China, Philippines, or other smaller countries or other assets where you can argue the level of corporate governance, for example, is not as high, but we're comfortable with that. Whereas with Bitcoin, we were not. And to be fair, I think you mentioned very clearly, the level of nefarious activity in digital assets is significantly lower than what many would believe in the broader public. And on this point, Chair Clayton, you mentioned, for example, the low level of nefarious activity when it comes to digital assets. And I think the data proves it, and we can see how actually, yes, there's always people using crypto for bad things. And I think that's going to continue for years to come, in the same way that cash is used and other things are used as well. But why do you think, from a political perspective, let's say Congress, those arguments that crypto is being used mainly from bad actors and terrorist organizations is still the kind of the headline that is being advocated or put forward?
Look, let's just be pragmatic. When labels stick, even when they no longer are appropriate, it's very difficult to peel them off. Now, one that you hear all the time, and you regulation by enforcement. That's a label that has stuck to the regulatory community. Another way to say it is enforcement of regulations. The regulations haven't changed. The SEC has won virtually every case. Enforcement of regulation is at least as good a mantra. The same thing I think has happened with crypto. Crypto is dark web. It's nefarious. It's these types of things. That may have all been cleaned up, but peeling that label off and replacing it with, no, crypto is the most traceable asset. It's on an immutable ledger. If you have a problem, it's cash.
Exactly.
But shifting from one label to another in a politically charged, emotional atmosphere, never easy.
Yeah, maybe crypto, we have also, I think, a PR problem, a marketing problem, branding problem that needs to be addressed as well. One last question, I just want to get your views on the international element as well. One last point, you mentioned case wins, right? Of course, your last filing, last case before you left, was against Ripple. Any thoughts you have on how the court judgments came out of Ripple? Obviously, there was kind of a mitigated with some wins for the SEC and some others for XRP and Ripple. What's your view on it, looking back at it right now, like 2, 3 years after you left office?
Well, look, the way the court is now, and this is a case that has not been finally resolved.
Yeah.
There are appeals and the like. But if you look at the distinction I made at the beginning of our discussion between securities transactions that are for the purpose of capital raising, where I said we have very rigorous regulations, and then securities regulation for secondary trading. You look at what the court did, it said, hey, that capital raising transaction was a securities transaction. Now, the court found that the secondary trading transaction and its definition of secondary trading transaction was not. We'll see how that goes on appeal. We'll see how both of them go on appeal.
Yeah.
But the point I want to make is that we rigorously regulate the raising of capital from the general public, and that has not changed.
Yeah, interesting. So let's talk about a little bit international perspective. Obviously, when you're in the SEC, you're involved in many international organizations and associations, regulators from IOSCO to others. Over the years, and we're discussing at the initial, at the first part of our chat about the regulator of the future and what the future regulator will look like. When you look at the regulators internationally today, what regulators or countries or policy bodies you think have done a good job, or they have done a good job in embracing technology and change and its practical impact on the public?
Let me put it this way. I think that where you are, Abu Dhabi, Dubai, they are looking at what we were just talking about. Are there ways to use technology such that we don't need such a stark dichotomy between offerings to the retail public and the types of things that are sold to institutional investors? I mean, like I said, I'm sympathetic to the frustration that our regulation is so rigorous. Are there ways that we can use technology where we can take away some of those hurdles, but still have the same level of effective investor protection? I think some people are starting to think about that, but we really do need to bring new technologists into the regulatory ecosystem to make that vision a reality.
Absolutely. Actually, you mentioned Abu Dhabi and Dubai. Actually, where I'm sitting right now in Dubai, there was the world's first crypto specialized regulator, the Virtual Assets Regulatory Authority, VARA for short. Do you think that one of the things that we will see regulators do in the future is specializing in a very good VARA in this case, or you could argue back in the day with the CFTC in the US, but do you think this level of having specialized regulator, in the case of crypto, VARA in Dubai was the first one, but having this specialty at the regulator level is something that is good and or that we may see in the future in other jurisdictions?
Here's my view. I think we are going to need specialists in technology within all types of financial regulators, whether it's securities, commodities, banking, or what I would say is, central bank. All across the spectrum, we're going to need people who understand the efficiencies that can be garnered from adding technology. So I actually see technology bringing these regulators together. If you look at what actually happens in our financial system every single day, securities transactions, commodities transactions, they're backed by payments. Payments are backed by treasury securities. The ecosystem actually works every day across these regulators, to a much greater extent, and with much greater interdependence than we recognize. As technology pulls together all of those different functions, those regulators are going to have to get closer together.
Interesting, huh? That actually some of these challenges and technology could be the common denominator, actually the conveyor in a way of some of these.
I think absolutely. I mean, every securities transaction has a payment leg.
Yeah, absolutely.
And the securities settlement and the payment leg are quite separate. there's no reason why those different transactions can't become more harmonious, shorter in time, less frictions, probably safer and less cost.
Jay, I mean, maybe it's more of a personal question based on your experience, but I've been a professor for many years. I've been teaching crypto in law schools and business schools and trained many regulators and central banks around the world. And one of my personal observations, I don't know what you think about it, but it was often that it's very lonely at the top when you're a regulator. Like if I'm a normal person, quote unquote, I can go crypto meetup and ask a stupid question, and nobody will care, frankly, with what I ask. Like what I found in my own experience, that's why I publish books, and I find a lot of regulators actually listen to the show, they read my books, or they go to my online courses because they want to learn, but they cannot just ask. And it's very lonely because obviously I'm sure I don't know how it is when you're SEC chair, but of course you have advisors, but it's still a small circle of people that you're into. It's very lonely at the top. Do you find how did you address that problem personally when you were there? How were you able to learn about new technologies? And what advice would you have to other policymakers and regulators who want to learn about some of these new trends that are coming up?
So I'll give you a general answer, and then I'll answer about the technology. The general answer was I was very fortunate. I had a team, and I can think of almost a dozen people just right off the top of my head who were not afraid to challenge me, not afraid to say, Jay, that's not going to work, or I would go to them and say, what do you think? So that sense of loneliness at the top, from a dialogue point of view, I never really had that. I will say that when you run any organization, whether you're the CEO of a company, whether you're running from a responsibility point of view, you wear it. Doesn't matter who made the mistake. Doesn't matter if you did or didn't. Doesn't matter who it's you own it, and that's just if that makes you lonely, don't do the job, because that's the reality. Look, we just had some presidents here of universities who lost their jobs, resigned, or whatever. As I look at what happened, the public didn't like that they wouldn't take responsibility for change at universities. That's what the public. It wasn't. These are good people. They're trying hard, but they missed on the idea that when you're at the top and something goes wrong, it's your fault. It doesn't matter.
It's interesting how it works. Absolutely. I think on that front and on the technology side as well, like you said, I mean, it's important to be able to learn on these topics, but I think a lot of these, there's a lack of responsibility with a lot of, I mean, do you think regulators though have not taken responsibility in many cases, like of the lack of progress?
This is where the U.S. Turning over the government every 4 years, the revolving nature. This is where we have a little bit of a problem, because the adoption and implementation of new technology cannot be done in a year, cannot be done in 2 years. It has to be something that is planned out over time. And it's only human nature that people have a difficult time starting a project that they know they're not going to be able to finish.
Yeah, I think that affects the longevity and timeline people have in mind from that perspective. Absolutely. Well, Jay, we're coming to the end of the show. I can't believe time flew so fast. My bell is with me. So I'm going to ask you a quick question. I need 1 or 2 word answers, and my bell is here to keep us honest. Today, on this conversation, the bell is the chair of the regulator. So the bell decides the timing.
I should have had a bell.
Yeah. But I've been probably handy in some of these Congress hearings as well, I'm sure. So let's kick it off. You were at the SEC for a number of years. What surprised you the most with being a regulator?
The vast nature of our markets.
You mentioned you're open sea swimmer. What's your favorite beach to swim in?
Ocean City, New Jersey.
Well, here we go. Loyal there from that side. You played soccer in college. If there is one team of any soccer, or football for our international audience, that you think was the best soccer team ever, which one is it?
The Arsenal team that never lost a game.
There you go. A lot of Arsenal fans on the show. I'm sure you'll appreciate that.
Vieira, Henri,
Yeah, the dream team. What is the one skill you wish more people in the crypto community would have? One skill more people in the crypto community should have?
Patience.
Oh, good one. Sam Bankman-Fried gives you a call from, well, I don't know where he is now. What's the one thing you tell him, SBF?
Reflect.
Good one. If you could go back to university today, what is the one course you would take that you wish you had taken back in the day?
Meteorology.
Meteorology, really? Why is that? That's interesting.
Because the weather, I see the weather every day, and I wish I understood it better.
A 17-year-old kid comes to you and says, "Mr. Clayton, what topic should I study? What degree you recommend kids right now to get to be ready for the future?"
I'm biased. A technical degree with the best professors at your university. Whatever technical department has the best professors, take that.
I love it. What's your favorite legal or regulatory movie of all time?
Ooh, I think it's the opposite of legal or regulatory. The Sting. You can't police fraud unless you understand fraud.
Love it. If this is a tough one, I don't know how sensitive it is. If you could be tomorrow morning the CEO of any regulatory body around the world, not in the US, around the world, what entity you'd go be CEO of or chair?
The SEC, but I'm not going to do it again.
Very political there, very diplomatic. What is the one advice you would give to anyone who's entering the crypto space now?
It's a technology. Find the product that it most is like. Adopt that regulation and show people that your technology does it better.
There we go. There's another tricky one. A 17-year-old kid comes to you and tells you, "Mr. Clayton, I have these 4 job offers. Which one should I take? An investment bank, a law firm, a startup, or working at the regulator?" What job should he take as a first job?
17-year-old, take the regulatory job.
Really? Why is that?
Because you'll see a lot. You'll get to do a lot more earlier. And then in 2 years, decide whether you want to stay or do one of the other 3.
Amazing. Love it. And the last question was Jay Clayton, the former chair of the SEC and now a senior policy advisor and of Counsel Sullivan Cromwell. Mr. Clayton, this is a traditional question that people come on my show. If you could have lunch or dinner with one person dead or alive, lunch or dinner with one person dead or alive, who would you have lunch or dinner with?
That's so hard. Gosh. Oh, yeah. There's from technology to government to sports. Geez, I'm generally not stumped, but that's a stumper.
It's a tricky one. I know it's a tricky one.
I think. Oh boy, I think Edison.
Really interesting. Why is that? Great. I've never had that answer. I love it.
I think his inventions are still with us today.
Says it all. Exactly.
Right? They've really stood the test of time. Our electric grid is much the same as the electric grid he envisioned.
Great answer. I love it. I've asked this question hundreds over years. The first time I get Edison, I love it. Also, I love the rationale. That was Mr. Jay Clayton, former SEC chair. Thank you very much for being with us. If people want to read about you, hear some of your thoughts, what's the best way they can keep on top with Mr. Jay Clayton?
I think current, CNBC podcast. You got 5 minutes is all you can take. So there you go. And if you want more rigor, look at my speeches when I was at the SEC. My team and I tried to provide as clear a guidance as is possible.
Amazing. Well, thank you very much for being on the show. For all your listeners, hope you enjoyed this special episode with Jay Clayton. Again, thank you for all the support in the past year as well. And don't make sure to also subscribe to my YouTube channel where you can see the video version of this podcast, as well as a lot of other exclusive content. Thank you very much, everybody. And see you soon for another episode of the Future of Money podcast. Thank you very much.